Welcome to our deep dive, into PetroChina's 2023 performance. We're going to be dissecting their annual report and focusing on their business segments, financials, what it all means for you as a potential investor, whether you're already familiar with PetroChina or just starting to, look into this energy giant. We're here to help you understand the key takeaways.
Yeah, PetroChina is fascinating, I think, because they're juggling a lot right now. They're one of the world's largest oil and gas companies, deeply embedded in the Chinese market and facing a global energy landscape that's shifting beneath their feet. And I think this report really shows us how they're trying to balance these traditional oil and gas operations with the growing push towards new energy.
And it's not just about drilling and selling oil and gas, is it? They're involved in so many different aspects of the energy sector.
Yeah, exactly. I mean, we're talking refining, producing petrochemicals, marketing those products, even handling natural gas transportation and sales. It's a sprawling operation with a lot of moving parts, and each piece of the puzzle has its own unique challenges and opportunities.
Okay, let's break down these business segments then. Um, their report outlines five key areas: oil, gas, and new energy refining chemicals and new materials, marketing, and natural gas sales, and each one plays a crucial role in their overall strategy.
hmm What's interesting here is how PetroChina is trying to achieve what they call high quality development across these segments.
Okay.
And so this means, increasing their reserves and production, while simultaneously streamlining their processes to become more efficient.
So it's not just about pumping out more oil and gas, it's about being smarter and more strategic in how they do it.
Precisely, they're focusing on key domestic basins for exploration and development, investing in technologies to improve recovery rates, and dipping their toes into unconventional resources like shale oil and gas. It's a multifaceted approach to maintain their position at the forefront of this industry.
Yeah, it sounds like they're trying to maximize the value of their existing assets while also preparing for a future where those resources might become less central.
Right.
But let's talk about the financial side of things.
Yeah.
How did PetroChina actually perform in 2023?
Okay, well, their operating income decreased by 7% to 3,011,012 million RMB in 2023.
Okay.
Lower oil and gas prices were the primary culprit here, particularly that 16.8% drop in the average price of crude oil down to USD 76.60 per barrel from USD 92.12 in 2022. That kind of price drop is bound to impact their bottom line.
It sounds like a significant hit. Did that impact their profitability?
Yeah, well, this is where PetroChina's operational strength really shines through. Despite that revenue decrease, their operating profit actually increased by 4.3% to 253,024 million RMB. And their net profit that climbed 8.3% to 161,144 million RMB.
Okay, so even with the lower oil and gas prices, they're still managing to improve their profitability. How did they pull that off?
Yeah, it's a combination of factors. They implemented cost control measures, optimized their operations for greater efficiency, and managed to increase their sales volume to partially offset that revenue loss from those lower prices.
So they tightened their belts, got smarter about how they work, and moved more product. It sounds like they're adapting pretty well to a challenging market.
They are.
What about their cash flow?
Their cash flow statement shows a similar story of resilience. Their net cash flows from operating activities rose by 16% to 456,596 million RMB.
Wow.
This indicates that their core business is generating strong cash flow even with the headwinds they faced.
That's encouraging. A healthy cash flow means they have more flexibility to invest in future growth, right?
Exactly. And that brings us to how they're creating value for shareholders.
Okay.
The report states they'll be paying a final dividend of RMB 0.268 per share for 2023, payable to shareholders on or before June 28th, 2024.
Okay, so they're rewarding their investors with dividends. What about share buybacks? Are they planning any of those?
That's a great question, but the annual report doesn't provide any specific details about share buybacks. It's possible they'll announce something in the future, or perhaps they're choosing to focus their resources elsewhere for now.
It sounds like we'll have to keep an eye out for further announcements on that front. But overall, it seems like PetroChina is using a multi-pronged approach to create shareholder value dividends, strategic investments, and operational efficiency.
Yeah, that's a good summary. They're definitely trying to navigate a complex landscape, balancing the need for short-term profitability with their long-term growth plans.
Now, to really understand those growth plans, let's dive deeper into each of their business segments. We've talked about the big picture, but I want to get a clearer sense of how each part of the business is performing, the trends they're facing, and the specific initiatives they're undertaking.
Absolutely. Each segment has its own unique story to tell, and by examining those individual narratives, we can gain a more comprehensive understanding of PetroChina's overall strategy.
So let's start with the heart of their operations, the oil, gas, and new energy segment.
Okay.
This is where a big chunk of their revenue comes from, even with those lower oil and gas prices we discussed. What's their game plan here? Are they just drilling more, or are they getting smarter about how they operate?
It's a bit of both, actually. Remember that concept of high-quality development they emphasize in their report?
Right.
That's very much in play here. They're focusing on maximizing production from their existing assets, especially in key domestic basins like Songliao Ordos and Tarim. They're also pushing into unconventional resources like shale oil and gas, which requires different technologies and
So
approaches.
they're trying to get the most out of their current oil and gas fields while also hedging their bets on resources that might become more important down the line. What kind of challenges are they facing in this segment?
Well, the obvious one is the volatility of oil and gas prices. They have limited control over global market forces, and a sudden price drop can significantly impact their revenue. They're also facing increasing competition both domestically and internationally.
It sounds like they need to be nimble and adaptable to stay ahead of the game. Are they doing anything specific to address these challenges?
Yeah, they're investing heavily in technology to improve their exploration and production processes. Think of things like advanced seismic imaging to locate new reserves, enhanced oil recovery techniques to squeeze more out of existing fields, and even digitalization efforts to optimize their entire operation.
It sounds like they're embracing innovation to become more efficient and competitive.
Yeah.
Let's move on to their next segment, refining chemicals and new materials. We saw earlier that this segment faced some headwinds in 2023. What's driving that?
One major factor is the global shift in demand away from traditional fuels like gasoline and diesel and towards cleaner alternatives.
Right.
This puts pressure on refining margins because the demand for those traditional products is softening.
So it's not just about producing enough refined products. It's about producing the right mix of products to meet evolving market needs. How is PetroChina responding to this shift?
They're working to optimize their refining processes to produce higher value products, things like specialty chemicals and advanced materials that are in higher demand. They're also investing heavily in research and development to create new and innovative products.
It's interesting how they're shifting from a traditional oil refiner to a more diversified player in the chemicals and material space. It sounds like a strategic move to position themselves for the future. What about their marketing segment? What's happening there?
This segment is all about connecting with customers and maximizing the value of their products. It's not just about selling fuel at gas stations. They're also involved in wholesale marketing, international trading, and even non-oil products. They're trying to capture a larger share of the value chain.
So they're branching out and diversifying their marketing efforts. What are some of the key initiatives they're focusing on?
They're working to strengthen their market analysis and forecasting capabilities. This helps them better understand customer demand and trends so they can adjust their offerings accordingly. They're also optimizing their resource allocation to ensure they're focusing on the most profitable markets and products.
It sounds like they're becoming more data-driven and customer-centric in their approach. Are they also exploring any opportunities in new energy markets, given the global shift we talked about earlier?
Absolutely. They're piloting hydrogen refueling stations and investing in electric vehicle charging infrastructure. It's a way to test the waters and position themselves for a potential future where these new energy sources become more mainstream.
Okay, that's 3 segments down. Oil, gas, and new energy refining chemicals and new materials and marketing. Let's talk about their natural gas sales segment. What's the story there?
This segment is all about capitalizing on the increasing demand for natural gas, both domestically and internationally. They're expanding their pipeline networks, developing new storage facilities, and forming strategic partnerships to secure access to global gas supplies. They're betting big on natural gas as a key energy source during the transition to a cleaner energy future.
It makes sense given the global push to reduce carbon emissions. Natural gas is often touted as a cleaner burning alternative to coal. What are some of the challenges they face in this segment?
One challenge is the need for significant infrastructure investments. Building out pipeline networks and storage facilities requires massive capital expenditure. They also face competition from other major gas suppliers, both state-owned and private, in the global market.
So it's a capital-intensive game with plenty of competition. Are they doing anything to mitigate those risks?
They're leveraging their existing expertise in oil and gas exploration and production to gain a foothold in the natural gas market. They're also actively seeking government support and forming strategic partnerships with international companies to share costs and expertise.
It sounds like they're playing the long game, recognizing that natural gas will be an important part of the energy mix for years to come. We've covered a lot of ground discussing PetroChina's different business segments, their challenges, and their strategies. But to get a more complete picture of their financial health, we need to take a closer look at their balance sheet and cash flow statements. You mentioned earlier that their core business is generating strong cash flow. What do the numbers tell us?
Their cash flow statement shows that they generated 456,596 million RMB in cash from operating activities in 2023. This is a positive sign as it indicates that their core operations are profitable and generating cash to fund their investments in operations.
That's a healthy number. But to understand how much cash they have available for future investments, debt reduction, or shareholder payouts, we need to look at their free cash flow. Can you explain what that is and how it's calculated?
Yeah, free cash flow is the cash a company has left over after paying for its operating expenses and capital expenditures.
Right.
It's essentially the cash they have available to use for things like dividends, share buybacks, debt reduction, or acquisitions. It's a key indicator of financial flexibility and their ability to create shareholder value.
So how do we calculate PetroChina's free cash flow?
To calculate free cash flow, we subtract capital expenditures from cash flow from operations. Unfortunately, the annual report doesn't break down their capital expenditures into maintenance capital expenditures, the essential spending to keep existing operations running, and growth capital expenditures spending on new projects and expansions.
So we can't get a precise free cash flow figure from the annual report alone.
That's right. However, we can make some inferences based on the information we have. Their cash flow from operations is strong and their capital expenditures are substantial, suggesting they are investing heavily in growth. This implies they likely have a decent amount of free cash flow, but we'd need more granular data to be certain.
Okay, so while we don't have the exact free cash flow number, we can reasonably assume it's healthy based on their strong cash flow from operations and their significant investment activity. Now, let's shift our focus to their balance sheet. What are some of the key things we should be looking at there?
A balance sheet provides a snapshot of a company's assets, liabilities, and equity at a specific point in time. One of the most important things to look at is their debt levels. Are they taking on too much debt to fuel their growth?
It's a good point. Too much debt can be a red flag, especially in a volatile industry like oil and gas. What does PetroChina's balance sheet reveal about their debt situation?
Yeah, so as of December 31st, 2023, their total assets were a massive 4,703,866 million RMB, and their total liabilities were 1,948,142 million RMB. This gives them a debt-to-asset ratio of roughly 41%.
Okay, 41%, is that considered high? Help me understand what that number means in practical terms.
Yeah, a debt-to-asset ratio of 41% isn't necessarily alarming in itself. It's actually fairly common for companies in capital-intensive industries like oil and gas. These companies often need to borrow money to fund large-scale projects and infrastructure. The key is to compare this ratio to their historical figures and to their industry peers to see if it's trending in a concerning direction.
So we need to look at the bigger picture and see how their debt level compares to others in the industry and to their own past performance. What about their equity? How does that factor into the equation?
Equity represents the portion of the company's assets that are owned by shareholders. A healthy balance sheet will have a reasonable mix of debt and equity. Too much debt can increase financial risk, while too much equity can limit growth potential.
It's all about finding that balance based on what you've seen. Do you think PetroChina has a healthy mix of debt and equity?
Yeah, based on their current debt-to-asset ratio and their strong cash flow generation, I'd say they are in a reasonably solid financial position. However, as with any investment, it's essential to conduct thorough due diligence and consider all factors before making any decisions.
That's sound advice. We've covered a lot of ground today, from PetroChina's diverse business segments to their financial performance and shareholder value creation strategies as we wrap up this deep dive. I'm curious to get your overall assessment of the company, given the challenges and opportunities they face. Do you think they're well positioned for the future?
That's the million-dollar question, right? I think PetroChina is taking many of the right steps to adapt to a rapidly changing energy landscape. Their investments in new energy initiatives, their efforts to optimize their existing operations, and their focus on high-quality development are all positive indicators.
It sounds like they're making a concerted effort to evolve and remain competitive. But what are some of the key risks or uncertainties that investors should keep in mind?
Well, one major risk is the volatility of oil and gas prices.
Yeah.
Global energy markets are subject to various geopolitical and economic factors that can cause prices to fluctuate significantly. Another risk is the pace of the energy transition. If the shift to cleaner energy sources accelerates faster than expected, it could impact the demand for PetroChina's traditional products.
So investors need to consider the potential impact of both external market forces and the global push for cleaner energy. What about the political landscape in China? Does that play a role?
Absolutely. As a state-owned enterprise, PetroChina is subject to government policies and regulations that can impact its operations and profitability. Investors need to stay informed about any changes in the political or regulatory environment that could affect the company.
It sounds like there are many moving parts to consider when evaluating PetroChina as an investment. Any final thoughts for our listeners as they continue their own research?
Yeah, I'd encourage listeners to dig deeper into the company's sustainability initiatives and their progress in reducing their environmental impact. This is becoming an increasingly important factor for investors who are looking for companies that are aligning with a more sustainable future.
That's an excellent point. Sustainability is no longer just a nice to have. It's a must-have for companies that want to thrive in the long term.
Exactly. And finally, I'd remind listeners that investing in any company, especially in a complex and dynamic industry like energy, carries inherent risks. It's crucial to do your own research, consider your investment goals and risk tolerance, and consult with a financial advisor if needed.
That's sound advice. This deep dive has provided valuable insights into PetroChina's current state and future direction. But as always, we encourage you to continue your own research, stay informed about industry trends, and critically evaluate the information to draw your own conclusions about PetroChina's prospects.
Well said. It's been a fascinating exploration of PetroChina, and I hope our listeners have found this deep dive informative and insightful.
I agree. Thanks for joining us on this journey into the world of PetroChina. Until next time, happy investing.